Hey folks, Dan Frio here with your market update for July 23rd, 2024. So if you're out there trying to buy your first house, you're going to have affordability issues. We know that. Prices are going up, sales are competitive, and interest rates. The good news is interest rates are starting to come down. So that's the three topics we're going to talk about. Why? Well, the economic data in today was right through here. The only news we had today was existing home sales. And I'll rephrase that, existing homes sitting on the market. Why? Well, right through here. Here's where the existing numbers previously were. Now, NARS, that's the Association of Realtors, they figured we would be at a $4 million unit pace for homes. Okay, so the last reading was actually at 4.1 million, was a little bit above consensus. Then they revised their forecast to 3.9. How'd the number come in? It actually came in at 3.8. Okay, so the headlines that we have right now is basically saying here, June home sales slump, pointing to a buyer's market as supplies increase. But the bad news is, continues to roll in. Home prices go to the slowest level since December because of mortgage rates, but here is where the pain actually keeps coming. Home prices keep going up, okay? So where's the crash? Well, here I keep telling you guys, if you don't have enough supply in the market, you're not going to have a crash. Okay, so let me just explain these numbers to you. I would be a perfect example, okay? If I could sell my house and make another $100,000 versus what it's worth and sell, maybe I would. Actually, I asked my wife if she'd like to do that. I think a lot of people are doing that who own existing homes. And the reason why, they have the luxury of not having to sell the house. I'll repeat that, not having to sell the house. So what you have to know, and most of you probably, if you're watching this video, you didn't own a house. You might not even been in college in 2008 when the market did crash. What caused that crash? Okay, I'll put it in one phrase: subprime mortgages. And if you don't believe me, do all kind of research on subprime mortgages, and you'll come back in a week from now and saying, okay, Dan, I get it. Okay, so if you don't get it, please do your research on the subprime mortgages. That's what happened back in those days. So right now, people, if you own a home, most people have the luxury of not having to sell. So we went through a report yesterday. If you want to check that video out, check it out right through here. I went over and showed you guys where mortgage delinquencies are and foreclosures. You're not going to have those properties coming in the market like you usually do, but you're going to see tons of videos saying foreclosures are skyrocketing and mortgage delinquencies are skyrocketing. Well, from basically a dismal year or 2 years or couple years, especially when the government had in moratoriums when you couldn't foreclose on anybody. So bet you didn't know that as well. Okay, so that's what we're seeing right through today's data. Let's go over to the markets, broad markets, and see how they're reacting to the only data we have for today. So we go to the broad markets. We have the Dow Jones up 67. We have the S&P up 14. We have NASDAQ coming back. Remember last week it was down about 900 points in 2 days. Well, now it's coming back a little bit there. Cryptocurrencies are probably down a little bit right now. Yep, they're doing some profit taking now, but they're ranging from 67 to 70. And then let's go to oil. I love watching oil to see what inflation's doing. And oil is basically at a low. So this is a fantastic number when it comes to the inflation stuff. Okay, so let's get to my calendar. How's the overall markets reacting to this right now? Well, the MBS is up 7 ticks. What in the world does this mean? Okay, we follow here on our channel the MBSs. They're the mortgage-backed securities. It's a bond that trades on Wall Street. That's yield is basically the biggest portion of your mortgage rate. Okay? So they take the mortgage bond, which you're seeing right through here is the price of the bond. So let me explain how this works. So the price of the bond, if the price of a bond, any bond, but especially this one is a mortgage bond, if the price goes up, that's what we're looking for. We want the price to go up because it'll bring down the yields. Okay, so let me do this. I try to do this once a week or once every other week. Let me explain how this works. So let's say, for example, we have a bond, and the maturity value of that bond is $100, okay? So we got a bond that's, when I turn it back into you, you're being the investor, you're gonna give me $100 back, okay? So let's say today I give you $50, okay? So I give you $50 for the bond, you give me the bond, and then next year I give you the bond back when it matures and you give me my $100, okay? So I invested $50, and in return I got 100. So what was my yield on that bond? It was 100%. Okay, so I gave you 50 and I doubled my money. Okay, so that's 100% yield. All right, so now let's drive up the price. To make it simple, let's say I pay you $100. Okay, a higher price. So I pay you $100 today, you give me the bond, we wait a year, and then I give you the bond back, it matures, and you give me my $100 back because that's the face value of the bond. So I paid up a way high in price. What did it do to my yield? Well, I gave you $100, you gave me $100 back. My yield is 0. Okay, so do you see how as the price raises, the yields come down? So we love when this number goes up. You saw it just move from 0.07 to 0.08. What's that going to do to today's rates? Will probably be about 6.85 by the end of the day if nothing else changes. So that's what we're seeing on that front. Let's go to the CME FedWatch tool because we're watching this every day until next week. 8 days from now, the Federal Reserve is going to come out and tell us exactly what they're going to do. Well, we kind of know what they're going to do unless there's a complete shock in the system. What is this? Well, this tool actually tells us what the Federal Reserve's, the probabilities of what they're going to do at the next few meetings. So we go down through here and I'll show you what the charts look like. We go right down through here and it's been basically at 93.6% for the last, I'll say, week. So here's the probability charts. Right now, the federal funds rate is 5.25 to 5.5. You're going to see that right here. This column down through here is what month and what percentage probability there's going to be a change. So in July 31st, next week, when the Fed meets, there's a 97% probability they're not going to do anything because they're going to stay right here with where the federal funds rate is now. But at the next meeting in September, there's now a 93% chance they're going to cut rates. How do you know? We're going from a 5.25 to 5.5 yield down to a 5% to 5.25 yield. And then from there, it kind of goes down. So they're looking basically right now of possibly 2 rate cuts so far this year. I'm all on board for the September, and then from there, I'm data dependent on what's going to happen at that point. So that is the report for today. If you're out there and you're like, hey, Dan, what do you do? How do you do stuff? Why do you do these reports? Well, my goal here, my whole goal is to help you guys understand real estate and get through all the clouds and the black holes out there that basically just give you information that half of it's just not even valid. So my goal is to make sure you're an informed home buyer. You know where to go, what to look for, and how to do things. We're actually coming up with classes to provide you guys to basically walk you through from all, what is credit reports and what are credit scores all the way down to the day you're going to get the keys in your hand. But if you're out there and you're like, hey, Dan, I need some help. I'm looking to buy my first house or maybe my second house or maybe my first investment property. Or I closed last year and the rate was 8. Even 6.5% today would be better. Well, visit us at therateupdate.com. Here it is. The one thing I want to ask you is if you're looking to buy your first house, okay, check out the grant program. Yesterday, I had a young man. He put in his he has his application in. He ended up putting a house under contract. I just got it this morning, and I gave him some great news already today. He qualified for a $6,500 grant that he didn't even know about. So there's a program in there that gives you $6,500 to use as down payment assistance, closing cost assistance. It also gives you a $500 credit toward the appraisal and also a $500 credit toward a home warranty. So check that out before you go to that button right there is the apply now. But if you don't want to hit the apply now button, you're like, I just want to talk to somebody. Can I? Well, yeah. Just scroll down at the bottom of our website. And remember this, therateupdate.com. You're going to scroll down, see mortgage calculators, a whole bunch of tools and blogs, and you're going to find the information right here. You can reach us at 844-775-5626, or you can email me directly at dan@therateupdate.com. Thanks so much for watching, guys. We are like 20 people away from 30,000 subscribers. So see if you can be the 30,000th subscriber right down there. So thanks for watching, guys. I'll be back at the closing bell to let you guys know how the market ended. Take care. Have a great day. Bye-bye.